Most traders wait for the perfect setup, but professionals, they don't wait. They trade the market profitably no matter what it's doing. So in this video, I'm going to break down the systems and strategies that let them win in real world conditions at any time and show you how you can trade smarter too. So if we look at the yearly candle of 2025 for Bitcoin, the picture is anything but clean. The year opened around 93,361 and closed closer to 87,000, meaning the market finished down on a simple open to close basis, negative 6.45%. It's kind of like the voyage of Odysseus. After years at sea, storms, detours, battles, and near disasters, he eventually returns to exactly where he began. So if you only looked at the start and the end points, you'd think very little happened. But anyone who knows the story understands that the distance traveled wasn't measured in miles, it was actually measured in trials. So during the year, Bitcoin traded as high as 124,000 and as low as 76,000. Now that's an enormous spread. Two major corrections occurred within the same annual candle in a year where many participants were expecting a straightforward continuation of a bull market. Directional conviction was punished repeatedly. Predicting prices became not just difficult, but actively misleading. And yet, despite that uncertainty, the volatility, it just never disappeared. Price moved aggressively in both directions. That distinction, it really does matter because while directional traders struggle to stay aligned, systems designed to operate within volatility rather than predict where the price should go, continue to function and continue to profit. That's how, even in a year that finished down overall, many of my clients were still able to generate 25 to 35% or more over the period using a fully automated trading system that we built. And it was not by guessing the next move. It was not by relying on a clean trend, but by responding mechanically to what the market was actually doing day by day and move by move. So let's take a look at how those returns were generated in this demo.
All right, so what you're seeing here is basically the volatility capture that the algorithm is making. And you can see here that the blue little arrows there are the entries and the pink ones here are exiting all positions. And we're basically just going to run through, as you can see here, 1st of Jan 2025 to December 31st, 2025, and might as well have a look at the results. But you can see basically from the bottom left to the top right, we've generated 33% in this year. And as we said at the beginning of the video, Bitcoin has actually generated a negative 6% return. So it's a significant outperformance there. And you can actually see all the trades in real time. This is exactly how they were entered. Like we said, the blue ones are entries, the purples are exits. And what we're doing is we're just reacting to what the price is doing. As the price moves up, we're taking profits, capturing that volatility. And as the price moves down, we're moving up here, very, very easy when it's moving up. But as we're moving down, we're capturing that volatility. And the best thing about this is that it's doing it with a long only strategy. So we're not predicting price directions by going both long and short at different times, but we're using a long only strategy. But with this particular strategy, we're able to actually make money from a long only position, even as the market goes down. And that comes from the engineering of our position size. So we can just basically run this through the year. We're at June now and just keep following the trades. It's actually really cool to look at on the full year. But as you can see, some trades, we hold them as long as they need to. This one here from 12th of August, very long trade all the way to the 1st of October. So when you're trading with 6 to 7 figures at scale, really, you just need to let the algorithm do its thing. The market is going to do its thing. The algorithm is going to do its thing. And we know because we've spent the time to set up the system, to engineer the strategy, to build the architecture, that everything's going to execute based on what we've already given it. And as you can see, the proof is putting there 33% in the year generated from this exact strategy.
So you've just seen the system run and you've seen capital get deployed, you've seen orders placed, positions managed, and exits handled completely automatically. There's no discretion, no timing decisions. It's just the system doing what it was designed to do. So rather than just getting into it deeper, I actually want to take a step back for a moment and explain why this actually works the way it does. Because if you only look at the executions, it can feel almost too simple. A base order goes in, safety orders follow if needed, and then the position just resolves, and then the process simply repeats over and over again. But that simplicity is the result of structure. It's not the result of luck. The easiest way to understand that structure is to think about it the way that a military strategist would think about a campaign. So no serious commander commits all their resources at once. They deploy in phases with clear rules and with control maintained at every single step. And that's exactly how this system is designed to operate. You've already seen the base order, so I won't re-explain it in detail. It's simply the system establishing its initial position under controlled conditions. It's not a prediction. It's not a statement of conviction. It's just the first phase of deployment. And you've also seen the safety orders. And again, no surprises here. They're planned in advance. They're staged at predefined levels and deployed automatically if price is going to move lower. Their role is more structural. It's actually improving the average position while keeping total exposure within strict limits. Now, what matters is not any individual order. What matters is the entire campaign defined before the first order is placed. And then once the system is live, there are no decisions being made in real time. There's nothing to override. There's nothing to debate. Execution simply follows through with the plan. And that's why volatility isn't a problem for this approach. It's actually what it thrives on. And markets naturally can expand and contract. They overshoot. They even mean revert. And when those movements happen, even partial retracements allow our positions to resolve cleanly. Large moves close on entire cycles. And this is how the system can generate consistent returns even over years that look flat or messy on a chart. And in 2025, discretionary traders were focused on where the market should go. And this system is built to operate inside where the market actually moves. And once you understand that, the executions you just saw, they stop looking clever and they start to look inevitable. And all of this can sound abstract until you actually see it executed. Because the real edge isn't just what the system does, it's how it's actually engineered around the capital. So if you want to watch another video, I can walk you through exactly how this translates into real execution. And you'll see how a $300,000 trading account is structured, how risk limits are set, how orders are spaced, and how the system is deployed end to end in under 30 minutes. And that's where these ideas stop being theoretical and start becoming practical. So if you want to see how professionals actually set these systems up, then go ahead and watch that video. It's coming up next.